Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey, Burke from Stacey Burke Trading, and today we're going to be talking about the high and low of the day and just clarifying some questions. A lot of excellent questions from traders, but coming back to understanding why and how different opportunities can present in any of the 3 sessions, Asia, London, or New York, for traders who are trading those different sessions around the world, and how I look at the US session when I come to the screen for my New York session. So several traders have answered or asked several questions, and I'll try to answer as many as I can. But more importantly, clarifying the big picture. And we start the new week. The 2 areas that I am most concerned about with the beginning of any week is the high of a week and a low of a week on all instruments that I am trading. And then, of course, the high of the day and the low of the day. Because that's what allows me to form a thesis for the New York session. And many times, depending on the instrument, there may be some excellent moves in Asia. There may be large moves in the Europe-London session. And of course, when I come to this screen in New York, I may be at the end of a move, or I may be looking at other opportunities to either continue a trend trade or for a low of day or high of day reversal opportunity. And obviously, those that follow me regularly know that I like to look for shorting or high of week opportunities. But my main emphasis is the high and the low of the day. And as I mentioned, and I say this repeatedly, is that a lot of traders get caught up looking at all these bars, and they say they don't get it, they don't get the setups, they don't understand, how did you see that? Whereas I'm looking at the level, and I want to know, number one, is this instrument in play? So obviously, if we haven't taken out a weekly level or a daily level when I come to the screen, then that instrument, I need to understand where we're at in the larger picture of what's already happened. So when a market breaks out in particular, so if we just back this up again, we'll go to an hourly chart just to see the bigger picture here. On the Friday, we see the market take out the low of the week, break out and reverse and fail. Now, one trader messaged me and said that I was incorrect about what Dalton was actually really talking about, because he was talking about the close. And as I reiterated to this trader, because currency trades 24 hours a day, and so does gold Monday to Friday, oil and the indexes, although they have a 1-hour window, typically the most common day that you will see a gap is on a Monday, Friday, Monday changeover. And if I don't see that gap, that area is still relevant because it opens up at the same level as the close. So if a market closes out of balance, it's going to open out of balance, and we can see a small gap today on the Japanese yen. But coming back importantly to understand the high and low of the day, when we come to a new day, the market will already potentially maybe be, we could look at this and say that's a peak formation low, but we can't confirm that until we get the current high of day broken. That can potentially confirm that this peak formation low at the low of the week with trap volume that reversed and closed back inside of the range now can confirm that this is potentially our day one. And thus, if this is day one, this may be a day 2 trend trade. So we have obviously traders who may have shorted this at the high of the day in the Asian session for a trade back to the low of the day, which was the higher swing low. Asia put in a higher low. The market took out the high of the day and shorted down to the low of the day, a session scalp. Day 2 traders, though, who saw the potential for the day 2 trend trade in the Europe-London window, may now have been taken that trade, and with the trend trade, might have been looking for a larger range expansion opportunity as their potential profit target. But often, as we see in many cases, this market will break out and pull back before it continues the trend. And that brings us into the US window. So again, traders who are looking potentially to short the high of the day in the US window may have had a small session scalp, but you've heard me say again, on a day one, Don't try and count. Don't expect a lot potentially on a day one runner. Day one being the day one of our new week. So we have breakout traders of Thursday's low triggered into the market at the low of the week. The market reverses that breakout. We now have a failed breakout with trap volume. Triggers the high of the day without breaking out. So understand that these, we'll just zoom in here. These little breaks, these little false breaks up to the high are not breakouts. That is a breakout. That is a breakout. And when it pulls back and continues, we have a breakout, pullback, continuation trend trade from the original move at the Europe-London Open that continues back up to the high of the day from Thursday. So again, understanding who is in the money. We have breakout traders who are shorting the break of this on other time frames, 4 hour, 1 hour, daily, maybe weekly lows. That market consolidates the failed breakout, consolidates, and continues the move. Now, I mentioned today about a third hour parabolic gold trade. And one trader said, I didn't think I thought those were only 3-day setups. I don't see that in the playbook. And I reiterated it's between page 84 and 90. There are 3-day parabolic moves and there are 3-session parabolic moves. This is an example of a 3-day peak formation high, peak formation low, consolidation trend trade. It doesn't go parabolic, but it's the same setup. Day 0, peak formation high, peak formation low, failed breakout, consolidation, trend continuation. We'll look at some other examples of this, but I want to reinforce the levels. The levels are where I'm looking to work from. I'm not worried about is it going up, is it going down. This level tells me this market is in play. As I said the other day, Dalton says to answer this question each time you're going to trade the session that you're in. What is the market trying to do? Well, it's obviously trying to go higher. How good of a job is it at trying to do it? It gets down to the low of the day and it tries again. And this time it breaks out. 1 push, 2 push, take out the low of the session, and a third push that breaks out, pulls back, and continues the move. And you will notice that if we talk about price always being in a box, there's our new box currently. We were in a box from Thursday's low and Friday's high. When the day started, the market tried to break out, came back, and eventually broke out of that box and found support at the previous day's high Friday to continue back up to the high of Thursday. So where were traders able to enter this market? Well, obviously, we redraw when a new level is made. For traders heading into the Europe-London window, we redraw the high. Asia made a new high. There's our current levels for looking for our trade opportunities. The market begins going long before the window starts and continues that move right into the open for a low-hanging fruit trend continuation trade. So again, in terms of identifying a 5-star versus a 3-star, if we go back and we talk about day 1, day 2, day 3, well, this is a 5-star opportunity. This is before the Fed. But in terms of the template itself, day 1, day 2, day 3, that's a 5-star setup. In terms of a session 1, session 2, session 3, the London low, US session high, Asia takes it higher, brings it back down, breakout pullback. These are session scalp opportunities. When I come to the screen in the US session, this is a low probability instrument that I'm looking at. The reason being is that there were other pairs that offered better opportunities in the US window. That said, 6 minutes prior to the New York Open, the Japanese yen still gave a decent 25 plus pip move back to the low of the session. So again, there are other opportunities, but coming back to the basic understanding, it took out the high of Thursday, which was our target after breaking into the new box. The market came down and broke structure on the inside. And I know traders have sent me screenshots of other different templates and names. Again, I will repeat this. To me, everything is either a pump and a dump or a dump and a pump. I don't overcomplicate it. It is either pumping up for a short trade or it is dumping down for a long trade. That's it. That's all it is. And I'm looking for this in the timing window. First hour makes a high. They make a higher low. The second hour locks that in. They pump it back up. engulfment for the beginning of the move down, a third hour pump up into that breakdown, and the collapse. Again, high of session, high of day, back to the low of the session. Let's just back this up again. It's the process that I want everybody to understand. I don't care what instrument it is. We're just looking at the yen as an example, but they failed breakout. And then our new levels were the high of the day and Thursday's low, because we broke back inside. Those are the two levels. They broke higher. They tried to go higher. What is the market trying to do, and how good of a job is it at doing it? And so when Asia made the higher high, we redraw our level, and we have our low of the Asian session, and there's our current box. The market then proceeds and breaks out of the box, and then pulls back and continues that move. Our next level, therefore, then is the high from Thursday's session in the U.S., high of day in the U.S. session, and our new low of the day is where we broke out from Friday's high. Obviously, the redrawn level is our target, but Friday's high still remains a potential level of major support. And you'll also notice that we've broken out of a double zero box into a new 100 pip box, traded up to the third level before breaking down in the U.S. window. So if we just take a quick look at the other U.S. pairs, we can see potentially a day one on Thursday on the U.S. Swiss franc, a day two on Friday. The market has broken out and stayed out of balance. So again, understanding where did it close, where did it open, there's our Monday gap. They trade back up into the gap before breaking down in the London window. When a market breaks down and pulls back, we can redraw our levels. And again, pay attention to where the close is. This market closed out of balance, puts up a peak formation high, trades back up into it in the Europe Open before breaking back down into the lower box. Our two blue levels. So again, a low probability, low hanging fruit potential trade setup with an expectation possibly that it could trade back down to the low. Day one, day two, day three, we have a market that closed out of balance. It breaks down and fails, potentially targeting the low of the day. Okay, we have a market that may be offering us a low-hanging fruit continuation trade in the U.S. session, and they pump it up. This is a 5-minute chart. We can go to a 1-minute chart, where I repeat, once you have a thesis and you know the levels that you're looking for, how does price behave when it gets there? What time is it? What is the general template that you're trading in? So again, we have a market that's broken down on day three. Perhaps we're going to get a move back through the low of the day. We get our engulfment entry after 3 pushes into the high of the day in our second hour. However, when the market gets down to the low of the day, it goes into consolidation. 1 push, 2 push, 3 pushes. We've been in this trade now roughly 20 minutes. We're into the New York Open. There's no real follow through, and I say this repeatedly, these trades should collapse through. They should move quickly. It's Monday. It's our opening range. So again, understanding on a Monday, this may be the extent of that move. Trader who has shorted this hasn't quite got his 25 or 50 pips or wherever he expected or she expected this to go, but they have had no stress, and the market is consolidating at the New York Open at the low of the day. The low has been hit. Take the money, lock it in, look for another opportunity if this was an instrument that you took the trade on. If you were trading this in Europe, again, just the process. We had a market that filled the gap. We have our closing price. The market put in a high of the day in our Asian session. The market breaks down in our gap time, takes out the higher low. Lower low on the inside, that is the setup for pump and dump. No other names, not calling it anything else. It's as simple as that to me. Pump, pump, pump. You can trade this on the 5-minute. You can trade it on the 1-minute. Once you have your thesis there, the idea is they're pumping it up. I will re-enter on the failed pump up, the engulfment. And then our timing window would be an area for me to exit this trade, especially once we have taken out the low of the day. So just reinforcing that different sessions, different opportunities are going to offer different results. It's day one, it's a Monday and a new week. So there's my level. We have a breakout on Friday. I'll just bring up my weekly indicator, a breakout on Friday that consolidates at the close and stays out of balance, but breaks down in the beginning of the day on Monday. The market pumps back up above that level, and we have a consolidation. That market comes down and makes a lower low. There's our consolidation, our lower low now in the first hour of the Europe window. Again, we redraw that level. This breakout now has failed. Day 1, day 2, day 3, we could be going back down to the low of the day. So there's our new high and low levels heading into the US window. In the gap time, they bring it up one more time before dropping it down through the low of the day in that 7 a.m. to 8 a.m. New York hour. The thesis in the New York session would be that potentially we may have a low-hanging fruit opportunity, but we've just taken out the high of the day in the gap time. So again, this isn't a trade where if traders take this, they need to be asking themselves when the low of the day has already been taken out, am I shorting this into the low with no room for this to go? No idea. But the idea is that if you take this trade, what are you expecting to get out of it? And how will you know either to be at break even or to just take what the market gives you? We have 1 push, 2 push, 3 pushes down in the first 15 minutes of our New York session. Again, they come back up and get lower level shorts before consolidating, pumping it back up one more time and currently dropping down. So we're selling it after it's taken out the low of the day. That is not what I would consider a high probability low-hanging fruit opportunity. But walking back through the process, day 1, day 2, and then in the sessions themselves. So if traders were trading this in the Europe-London window, some traders may have taken that first swing inside. Again, as soon as you break a level, know that is where the market can fail. Lower high inside gets taken out in the London Open. They go vertical before dropping down back into the longs off the low of the day, consolidating, and then in the gap timing, again understanding that 7 a.m. hour. As we head into that 7 a.m. hour, the market then continues its move back down towards the low of the day. U.S. traders getting jammed in down low, lower probability scalp, a bit of choppy market, still moving down, but again understanding when to lock in the money if indeed you took this trade down low. Okay, the euro Thursday was our high of the week. Friday broke down on a first red day. That market came back and closed right at the breakout level from Wednesday's low of the day and has remained as an inside day. So we may have a scenario tomorrow where we get a high of day taken out. Currently, this is a low volatility, low probability day. It's an inside day, and we're trading back inside of the range from Wednesday's low of the day. So this potentially could be our day 1 on Friday. Day 1, day 2, we can get an inside bar trend trade. We can get an inside bar false break reversal. We can get anything. Well, we will be able to tell, hopefully, when price gets there, how it behaves and whether or not it is a best trade setup. So reinforcing, it's the levels to me that are key. There's my box. I'm not trying to read the price and all that stuff. I need to have a setup day, a signal day, and then a setup into the session that I'm trading. And these are the levels that I'm using to identify that. We come back and we look at the euro. We're still inside of the high and low of the previous week. And now we are establishing a new high and low of the current week, but we are inside of the previous week's range. We can look at spot crude or West Texas, and I'll give you my interpretation of what I saw as a potential opportunity in the second hour. The market made a peak formation low that broke out and reversed into the close of Friday's session, and that market stayed in a consolidation. Just redraw these levels. Broke out of Wednesday's low and then pulled back inside of Thursday's low of the day. We did not break out until the beginning of the U.S. window. Now, what caught my attention was, obviously, we have a potential peak formation low, but we had this running wedge formation. This is a 15-minute chart. And I thought that when it took out the high of the day, we may see a reversal that would come back at least into those higher level longs based on this breakout on day 2. Not that the market couldn't continue, but I thought we may see a New York session breakdown. So we have a market that goes vertical in the first hour, and then the same running price action. That whenever I see that sloped price action, I'm always looking where we may now be seeing evidence of a high of day being put in place. The market breaks down and gives a break in structure into that end of the first hour and the beginning of the second hour. First hour makes a high, and the second hour makes a low before the New York Open. So now we have a peak formation high and a peak formation low. And the thesis being that this market, as we've seen on gold, could potentially auction back lower. Just go to the 5-minute again into these higher level longs from the London window. So a stop hunt down and maybe a continuation back up to the high, or even a move back down into the double zeros on this pair and 75, I believe, on spot crude. And we had our little pump up, and right at the New York Open, I entered this market on the engulfment with the thesis that the high of the session was locked in, at least for this potential move down. And when it came and consolidated, I added a little bit more at the bottom, thesis being again this market would break down and collapse through. As soon as this candle printed, all of my positions went to break even on the lowest fill price. This W formation is a dead automatic reversal. This happened at the low of where our session started on our engulfment pattern. And so that again is evidence of a potential parabolic vertical short squeeze move, which some traders I know may have taken this, but my original thesis was that the New York Open would rifle through at least down to get shorts for a session trade, be out and done and dusted. When this happened, I decided that obviously this market still had the potential to go back up to the high of the day, and I was looking at gold and a couple of other instruments just to see how they were trading, and decided to leave oil alone after this. I wasn't going to try and give it a second chance. I did not like the fact that it had exploded so strongly, and decided just to leave this trade alone. And as we can see, that level now has become support, breakout, pullback, continuation a little bit later in the window, and maybe targeting on day 2. As one trader said, we could have a day 2 trend trade day, which brings us to gold. So we have a market that went up day 1, day 2, day 3 reversal on Friday. So just reinforcing that we had a high and a low on day 3 up high. And as one trader said, he was looking for the high of the day to be broken before the reversal. They gave us a high of day, and it actually did get broken. And if you pay attention up top here, you'll notice this is 15 minutes. Again, we went over this trade, but 3 pins at the high. There's 3 pins at the high. That's 45 minutes of them working the high heading into the second hour. But also we have high bull as potential major resistance. Now again, this is a 15-minute chart, and what I will often do if we have a situation like this is go to the 5-minute chart. And we have our little micro M structure and a high bull level that the market traded up into on our Friday session. Now we had news at 9:45 a.m. Friday on New York time. And we have a market that has, if we come back and look at gold, we have a market that was closed out of balance. And then in the Europe-London window, we had a market that made a new low, pumped up, and then came down and made another new low and a lower high, lower low, lower high on the inside. Then it proceeded to go up and make a new high of the day, of the current day, without taking out the previous day's high. So we have a peak formation low and a peak formation high. The market in the first hour went vertical and took out the high of the day without taking out the overall high from Thursday. It then went up in 1 push, 2 pushes, broke down from front side to back side. This is a 5-minute chart, and gave a lower low. The news candle and the New York Open pumped up. We have a inside bar and an engulfment candle at 50 on the, again, this is our 5-minute chart, for a 75 pip move. I'll just darken this up. Back into the longs from the London session. So pump and dump into the high of the day, the high of the week. If we go to our smaller time frame, you can see this clear. And this is the same trade that happens over and over again on gold. And one trader said, well, it's first hour, second hour, third hour. Well, the news on this particular day was 9:45. We made a video on this last week. The same trade showed up 3 times in 1 week, and here's the same trade again. First hour makes a high, and I said that when you get the engulfment like this, they go vertical and break the high of the day and engulf. And we're at double zeros. This may be the high of the session before the New York Open. 1 push, 2 push, 3 pushes, a breakdown in structure, the pump up before the news, New York Open, 1, 2, 3 pump up, and a collapse. One trader mentioned they sold it at double zeros. And again, I will not get in before the news. After the news candle spiked down and pumped and consolidated, the entry was, for me, above 50. Again, remember, once you know your level and your thesis is confirmed, peak formations are up into the high of the day. Peak formations are up into the high of the day. What is the level that I want to get filled at? 75 wasn't my option because the news candle had yet to be released. After the news and they pump it up, fight for the best price. I want to get filled at or better than 50 if the market allows me with the spread, so that when this breaks down, I am locking in the money. And again, that market took out the quarter level below the double zero box before pulling back, and we were approaching the end of the hour. The new hour opens up right here. This is an area, again, a new hour opening is when they may reverse the market for an explosive move back up. Brings us to today. So again, our focus of this video is I'm focused on the levels. I'm focused on the levels, not the bars, not the zigzags everywhere. I want to know when I come to the screen, what is my thesis if I'm looking for a potential best trade setup? We have a first red day. First red day is a high of the day, high of the session, selling opportunity if indeed it presents. And we also have an inside day. The market traded inside of Thursday's range. So we have a market that right away triggers shorts into the market, other time frame traders, breaks the low of the inside bar before pulling back in our Asian window. They pump it up and put a high of the day in place. So we now have a market that has broken the low of the day and pulled back and put a high of the day in place. This is our new high and low of the day, the current day, but we have shorts in the market. Which way is the market trying to go, and how good of a job is it doing it? This is not a failed breakout, so let's come back to where the low of the day is. When we get into our gap time, the market is now trading below the low of the day. It makes a lower low and a lower low in our London Open and a lower high. The market trades up through the lower high at double zeros before breaking down now and going vertical. So again, I get this question from traders. Can you do another video on what you're thinking and what your thought process is? I'm looking at the level, the blue line. That's it. And then when I come to the screen for my session, what is the opportunity that I may have when this window starts? What time might it happen? I say this the first hour, 30 to 45 minutes is when a market may put in a high or a low. It's in the playbook. We go over this. If it hasn't done that in that 30 to 45 minutes, maybe it's going to be 45 to 55 minutes. So the most important thing is to understand, I'm not trying to read all these little bars. I'm looking at the market. We've now broken out. So if we come back and look at our chart, we have a market that broke out just prior to the Fed last Wednesday and then went vertical on the Fed. So again, day 3, day 1, day 2, day 3, consolidation, peak formation high, peak formation low. So trader, again, I reinforce the day 0 parabolic setups show up everywhere. They show up over 3 days, they show up over 3 sessions, and they show up everywhere. You have to learn to read that. Peak formation high in Asia, peak formation low in the London session. Asia makes the high, London makes the low. They go into consolidation, trap shorts before going vertical, short squeeze on day 3. When this market comes down and puts a low in prior to the US window, where are we at? So again, this is an area we may potentially be finding support in. The 7 a.m. window opens and starts to come back up. This area may act as support. So London has put a high of day in place and a low, and then broken out of our low of the day. We've already broken out of the range. We now have broken out of the current low of the day. We break down, 7 a.m. begins to pump up. The market pumps up 1, 2, 3 and engulfs. Now this is on a 5-minute chart. I know traders don't like the 1-minute chart, but I want to reinforce just simplicity. We have a low of the day in place. The market goes up 3 levels of rise to 75 from the low of the day, 75 pips from the low of the day, and engulfs 31 minutes into the session, breaks down, pumps up, and consolidates at 50 and engulfs again right at the end of almost the end of our third 15-minute bar. Peak formations are up. This potentially now may be our high of the session for the first hour for a low-hanging fruit continuation short trade back through the low of the day. 3 levels of rise, 1 push, 2 pushes, 3 pushes, and a 1, 2, 3. 33 on 3 levels of rise for the low-hanging fruit continuation trade back to the low of the day. First hour now has put will mark the low of the day, our low of our first hour, and the high of our first hour. So the market has now put in a high and low in the first hour. Just zoom in on this a little bit. And we may be going down for another hour. We've taken out the low of the day. We've come down now 100 pips from the peak formation, 125 from high to low. And the second hour opens up inside. The second hour opens up inside of the first hour until it pins through 48 minutes into the hour. Now, I mentioned again the parabolic setup. We have 1 hour. It comes down. Second hour proceeds to auction up and put in a high of the session for the hour. 1 hour put in, the first hour put in the low. Second hour puts in a high. They proceed to trade back up into the high. 1 push, 2 push, 3 pushes before breaking down and pinning the low of the day. Peak formation low that gets pinned and pulls back up inside. We're still in the second hour. Peak formation low, peak formation high. You can use any one of these. They're all the same height. You can move this across, peak formation high to the middle one. It's a little bit higher. Page 84 to 90, I believe, in the playbook. 3 session setups, 3 session parabolics. We're at the low of the day, Asia, London, and now into the New York session. First hour, second hour, third hour, peak formation high, peak formation low, consolidation, higher high inside, and then the higher lows. The higher lows, this pushing pattern, these pin hammers, is the parabolic setup right at the end of the first 15 minutes of the third hour. 1, 2, 3 after 3 sessions. You will see this show up on days. This is a Monday, Japanese yen, peak formation high, peak formation low, consolidation, 3 session setup, US session high, Asia makes a new low, consolidation inside, Europe open, parabolic move back to the high of the day. 3 sessions, new week, new day, opening range, takes out the low of the week and reverses inside. It's a short squeeze, parabolic, but this type of day itself is a setup. This type of day will show up again and again. This level gets split. The low of the day, the low of the week gets split. Peak formation high, peak formation low, beginning of a week, consolidation, short squeeze, parabolic move. We see this set up everywhere. Peak formation high, we had a peak formation low, but they went lower at the end of the day, closed out of balance and opened at the same price. Peak formation high, peak formation low, parabolic move, Asian session. Again, Japanese yen, parabolic move, creeping trend down, breaks the low of the day. The creeping trend down breaks the low of the day for the reversal trade in the US session. Day 1, day 2, day 3. Day 3 typically will blow off in the direction of the trend. So the levels are what's key. That's what allows me to form my thesis. When this market breaks out of this level, this becomes my new reference point, not here, unless they break out of that. So they make a lower high, we redraw the level inside. Why? Because we've already broken out. Not trying to figure out which bar is which. There's my level. Now, if I have a level and I'm looking for a sell setup, what am I looking for if it's a sell setup? A pump and a dump. What am I looking for if it's a buy setup? What am I looking for if it's a buy setup? Peak formation high, peak formation low. They break out of the previous day, previous week's range in my US window. Peak formation high, peak formation low, consolidation, dump and pump. Dump and pump. Higher high on the inside. There's our lower highs. Higher high on the inside. Dump and pump. I have two trades that I'm looking for. Dumps and pumps and dumps. And they are off of these levels. Weekly and daily levels. Don't worry about all the other junk inside. If you're looking for a day 2 trend trade, it's a 3-session setup. Peak formation high. US session forms our high of the day. Peak formation low in Asia. They go lower, so we redraw the level. Peak formation low in Asia. Peak formation high, peak formation low, continuation trade, day 2. An example of day 2 breaks out, pump, 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 lower high, lower low for the short trade back down in the US window. Peak formation high, peak formation low, break in structure, lower high, New York open, 50 pips. So keep it simple, traders. What am I thinking? I'm thinking, do I have a setup? Have they broken out? Is this a potential reversal setup? Is it breaking out and running? I need them to either lock in the high or the low. If it's a low-hanging fruit, I want to see them pump it up and be able to continue the trend. When? Second hour, New York open. If there's nothing happening, maybe this is a third hour trade setup. Keep it simple. All I'm looking for is pump and dumps and dump and pumps. Major round numbers on the instruments that look like they have the best setup. If it doesn't look simple and I can't recognize it after all of these trades, then I don't even bother because they all look the same. When it's said and done with, they all look the same. They pump it up. There's a break in structure on the lower high, lower low. They pump it up. Timing window, engulfment for a vertical move. If it doesn't behave that way, I'm out of the market because it needs to behave and move quickly in the direction of that trade. And if it doesn't, I'm out of the market. So good start to the week, traders. Congratulations. It's going to be, I think, again, continuous opportunities. Keep getting better. Keep it simple. And may the markets go with you.